Okay, well, good morning, good afternoon, or good evening. And hang on a second, let me get my recording started here. We'll get official. There we go. Okay, so now we're official. So good morning, good afternoon, or good evening, depending on your perspective on the world. And welcome to Trading Coaches Playbook. I am Brandon Wendell, your instructor for the next hour or so. We're going to be going over looking at price reading, some things that people often either take for granted or don't quite do correctly. So we're going to go ahead and see how that works and to put it in our favor when we're trying to figure out what's going on in the markets. Sorry, getting a suntan here by my lamp, so I turn that down a little bit. Anyway, before we get started, and you can see I got my bow tie, and yes, they are real bow ties. I do tie them myself. I don't cheat. But just need to remind everybody that we are not registered broker dealers or investment advisors. I'm going to look at a lot of different securities, but I am not telling you to buy, sell, or hold those securities. It's not that I'm giving you advice or personalized recommendations. The information is just for educational purposes only. And just keep in mind that all trading does involve risk of loss. No matter what we do to try to minimize the risk, we can never eliminate it. And that's just a common sense thing, hopefully. But you can never eliminate risk, as I mentioned. Also, we're not subject to any trading restrictions. I and others at Free Management Partners can have a position in security or initiate a position in security at any time. So that being said, we'll jump right into this. But before I do, I just want to remind some people who may not be as familiar with us. At Wealth Builders HQ, we have a lot of things going on. We have a lot of free workshops, such as this one, the Trading Coaches Playbook, every week. I also have some other ones coming up as well on August 2nd and August 4th coming up. We're going to be doing a workshop where I am. We're going to talk about how to trade the markets using lower capital requirements and reducing risk with future spread trading. So you're more than welcome to join me for that. I'll give you the links in a little bit as well. And we are also doing a New York live event with Rob. He's going to be talking about charting your way to success in September 17th, 9 a.m. to 6 p.m. Eastern. So I'll get you the information on that as well. I also, on a regular basis, teach something called the E-Mini Think Tank. And in that E-Mini Think Tank, we meet 3 days a week. That's actually incorrect. It's Monday, Wednesday, and Thursday, 9 a.m. to 11 a.m. Eastern. So it's not PM anymore. We changed it to active trading hours. But we'll talk a little bit more about the think tank. If you like what you hear today in this workshop, you're more than welcome to join me in that think tank. And we do this on a regular basis where we get together, explore the markets, learn more about ourselves and those markets, and how to find high quality opportunities for trading. So if you want to stay in touch with me, another thing you can do is follow me on Twitter. I'm at TraderBdub. Rob is Rob Roy Fib Trader on the same on Twitter. We also have Wealth Builders available on Instagram, Facebook, and LinkedIn as well. And YouTube, we have a couple of channels. This is being streamed live right now on YouTube. The recording will be available on the Wealth Builders HQ website, or not website, but the YouTube channel. So you'll be able to review this as many times as you like. And of course, you can visit our website as well to get most of the information there. So I want to welcome everybody. And again, good morning, Bert. Afternoon, Kevin. Good morning, Helen. And good afternoon, Robert. So people are different time frames depending on where you are, I guess, in the US or the world. But we're here to talk about candlestick charts. And, I've been trading and investing in the markets for over 22 years, been teaching probably for about 16 and a half of those. And I've learned a lot of things, obviously. I keep learning. That's the neat thing about these markets. They do teach you new things. And one of the reasons I enjoy teaching is I actually learn from my students as well as from the markets. So there's always new stuff I like to add, but going through my education, I went a little further than a lot of people. I became what's called a chartered market technician, or CMT, where I've had to basically get a master's degree in charting. So I'm going to share with you some of the insights that I have from that experience in looking at those markets over time. And really, it comes down to a lot of basic concepts and a lot of simple things. Even though it's simple, it doesn't mean it's easy. So keep that in mind as well. Simple does not equate to easy. There's a lot of steps that you got to make sure you take. Actually, I just wanted to upload something here. Oops. Come on. It pop up here. There it is. I'll leave this page open, but I want to bring up a new chart. Well, actually, it's not updated. I'll update that first. Okay, so I'll come back to that in a moment. Anyway, what I'm going to do, as I mentioned, is share insights into how to better read price action. And it really comes down to four simple things. Four things. Number one, color. And you can change the colors of your candles if you want to, but for the most part, the default that most platforms and chartists use are red and green. And it comes down to simple concepts. If you're seeing a domination of one color, that is usually your trend. Now, before I go any further, I want to make note that when I trade, I use multiple time frames in order to do my analysis properly. So I use a lower time frame to find where to enter and where to exit, but I'm doing that based on the intermediate time frame trend. So as a quick example, if I go to, actually that's not uploaded yet, so I'll go to this chart. Let's say I want to do kind of a swing trade on a 4-hour chart. So here's my 4-hour chart. I'll clean this up. Okay. Now, if I look at this chart, I may find areas where I'm willing to buy or willing to sell. And by the way, this works on any security. I happen to be using SPY, which is an ETF, but I could do the exact same on currencies, cryptos, and futures. Doesn't really matter. So if I find an area, let's say we found this area of demand right there. Oops, just realized that my magnet turned on there. Now we'll get more accurate data. So if I find an area, this is a demand zone, but that demand zone can have two functions. One, it could be used to enter a long, or two, it could be used as a target for a short. What tells me which direction I should be trading is the trend. And that trend is not on this time frame. Okay, again, I call this my zone time frame. So if we're looking at the lower time frame, I call that, as I mentioned, the zone time frame. And that's where I find entries, targets, and even stops. Those are all identified on this zone time frame. However, in order to know what is an entry versus what is a target or a stop, I need to know the direction of the trend, the dominant trend that I am trading in. And that is where I go to what I call my trend time frame. And the trend time frame is, again, the trend or best direction in which to trade. So that trend time frame, or TTF, is nothing more than the zone time frame multiplied by either 4, 5, or 6. Okay, I did, William. Yeah, sorry, I didn't have a chance to respond to my LinkedIn messages or anything yet. I've been kind of busy this morning. Crazy day. But anyway, my zone time frame is nothing more than my trend time frame is nothing more than the zone time frame multiplied by either 4, 5, or 6. 5 is always the preferred number, but I tend to want to stick with common time frames. So for instance, in this case, a 4-hour chart, I can multiply by 6. 6 times 4 is 24 hours. So I have a daily chart. And then I would go to my daily chart to determine the trend. Those trends, by the way, don't go on forever. It seems that way when you're losing, but they don't. They actually do end. And what I have for that is what's called my perspective time frame. Or PTF. And the PTF, the zones here, pause or reverse the trend. Trend time frame, trends. Okay. So that perspective time frame, by the way, is nothing more than the trend time frame, again, multiplied by either 4, 5, or 6. It doesn't have to be the same multiple. I can use 4 for the intermediate, and then, for the trend, and then 6 for the perspective, or 5, 4, 5, and 6, 5, 5, doesn't matter. Okay. So right now, if I'm looking at that as a demand zone, I need to know what is my trend. Well, I can go to that trend time frame, which I already determined is a daily chart. And now looking at the daily chart, that's where I'm going to focus on the color. Okay. So going back to my slides here, actually skip this, go right here. When it comes to the colors, typically when you're putting in a bottom in price, what you're going to be seeing is sideways movement. And with sideways movement, the colors should be mixed, getting a mixture of red and green back and forth. So no real domination of any particular color. If you start to see more green than red, you're starting to pick up that domination of bullish candles. Kind of going back a little bit, if you're not familiar, the green candles are representing bullish candles because you close higher than you open for that period. Red candles are typically bearish candles because you're closing lower than you opened. So if your zone time frame, your trend time frame should be the 4 hour, and then you should use the daily for that perspective. Yeah, so if I'm swing trading again on a 60-minute, right there, once again, I could find zones. But in order to figure out what to actually do with those zones, for instance, this is a zone here, but to figure out what to do with them, I would go then to the 4 hour chart to see what the trend happens to be here. Okay. So at a bottom, we see mostly mixed colors. When the trend is picking up and becoming bullish, we start to get a domination of green candles. It doesn't have to be solid green, it doesn't have to be all green, but for the most part, you're getting a lot more green than you are any other colors. Okay. So that's an uptrend. As we're reaching a peak, you'll start to see indecision coming in, and you'll get that mixed color once again between red and green. So right near that peak, you'll see that mixture. And we start again getting sideways movement in price. Now, this is not always going to happen. I joke and I say, in technical analysis, everything always happens except for when it doesn't. So there's no guarantee that you'll always have these patterns happening, but this is the most common way to look at the markets and the theme that usually occurs. So at a peak, you're usually getting those mixed colors again, indicating indecision. You lost your domination of bullish pressure. And once we start seeing mostly red candles, we're in a downtrend typically and seeing prices drop. It seems very simple, seems oversimplified, but it really does work. So when we go back to our chart here, when I'm looking at trends, we can go back in time here. I happen to be on the 4 hour time frame. It doesn't matter, right? And we can see that off this low, we had, excuse me, red, red, green, red, green. Didn't really have a domination there, did we? Then red, green, red, again, kind of sideways, green, green, picking up a little bit of domination, but not much. That's a weak uptrend. I probably should use something different than the ETF because they're going to get some gaps. This basically follows the index and also the futures, which trade 24 hours a day. So you're going to get a lot of gapping and not the best or most accurate information. Let's go to a stock. Let's go to Apple. Okay. Right now, if I'm looking at Apple, this is back in February, we see that we have mostly red, but a couple of greens, but actually not really mostly red anymore. We had mostly red here, but notice green, red, red, green, green, red. We're sideways. So this could be a peak as we came off of a low, and we wait to see what comes next. We got red, red, red. Now we're dominating with the red again. So we should be entering into a downward trend. Notice I said should be because there's nothing 100%. It's just an odds enhancement. That's all. And let's see if we keep going down. Nope. Yep. For the most part, mostly red. Now we're getting mixed red, green, red, green, red, green. So indecision, this could be a bottom coming in. More red, we're still going down. So it wasn't a bottom. By the way, I want to make a note here as well. When we're looking at this color, shape, size, location, all four of these that I'm going to get into, you can't just use one by itself. It's going to be a combination of all four. So we're kind of looking at them in isolation, but in trading, we will put them all together and work basically by using all of them. So right now we had some indecision, but we weren't at a demand zone. So then we continued our downward move. We have more red, still downward. We're alternating red and green yet again. This could potentially be a bottom. Still more red coming in, not the bottom. Still more red. Now it's starting to change. In the last 6 candles, we had 3 green, 3 red. this could be a bottom being put in. And if we see another green coming in, we're probably in our uptrend. Nope, not quite yet. Getting the domination of red. We're in the downtrend still. This was just a pause. And that's a strong downtrend. You wouldn't want to be buying during that, right? Because if you do, you're losing. We'll buy near the bottom or at the bottom, but we should get a signal. Whoops, went too far. Green, red, red, green, red. Still domination of red. No reason to buy yet. Now we have three greens together. If you look back in this entire move, do you see three greens together? Not once, right? There's one green, two, one, 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 one. There's not three greens together. Now that we have three greens together, that's telling us there's a lot more bullish pressure than we've had in this entire move to the downside. We may be entering that uptrend finally. Oh, four green. Look at that. And there it is. Well, we're getting mixed colors yet again. The trend may be getting weak. And again, this is just an odds enhancement. That's all. Mixed colors, red and green. Doesn't look like we're going to keep going down anymore. Domination of red came back in. We're about to break to new lows. Bunch of green could be getting ready to rally again. This has been pretty choppy, but you get the idea. More green dominating, and there's our uptrend. How do we know when the trend's ending? Well, we have one red, two. If we get a third, this is probably the end of the uptrend. Was not. So we still have a domination of green. That domination of green, by the way, came right here. Really, all of it started where we got the three green together, then we added a fourth. Since that point, we really didn't go much lower, did we? We had a slight move down right there, but didn't really go much lower. We ended up with the beginning of our uptrend. So the change in domination of color told us there's a lot of buying pressure here. We're likely to start rallying, and sure enough, we did. So it worked. And how do we know when the trend's going to end? Well, we got two red. Now, we've had two red before. That's not a big deal. By the way, it's not always 2, 3, 4. It could be any number. But when you're seeing that domination change, let's see if we get another red. Nope, we're still going up. Still only two. Still only two. But we're starting to see weakness again. Notice the red and green are getting mixed. This could be a top. Once more, I'd look to see where we are in location. We haven't gotten to that point yet. Still a lot of green, so it's just a pause. Still no more than two red together. Now we finally have three. So just like when we had the three green together, that warned us that prices were getting ready to move back up. Now we have three red. This could be the peak of the market at this point. Not so much yet. Yeah, we are starting to move lower. There it goes. Let's see if it keeps going. Look at that. All of this move to the downside was forecasted by one thing happening. And that one thing was, oops, wrong one. These three reds right there being together. We didn't have three reds at all in this entire move up. Once we got that, you see, we started our downtrend. It's nice that you get that warning. That was on a 4-hour chart on Apple. I can go down to a 60-minute chart on, let's say, let's do continuous contract on feeder cattle. And let's see where we are right now. This has to be June. So we were moving in a downward trend. We got a couple of green together, started pausing. Overall, we're sideways in motion. But if I'm trying to figure out my trend and when it's likely to either reverse or continue, we have mixed colors right now. Domination of red and breaking down to new lows. Mixed colors, this could be the end of the downtrend. We have to wait and see if we get more green together. There they are. So we've got three green together. This may be the bottom being put in. And there we go to some new highs. We're losing our domination of green. So that rally may be all we get. And we may be getting ready to turn back down. So once again, I would do this on the trend time frame to give me an idea of where we're likely to go. Green's picking up again. It was just a pause. And we rally. Three red together. We haven't seen that. since here we made fresh lows after. So if we're getting 3 red together, we're more likely to move to the downside. And there we are, making some new lows. See how that works? So that's color. The next one is shape. And when we're dealing with the shape of a candle, what we're really looking at is where is our close versus the high and the low for that period. So you can use this once more on any security, any time frame. I've traded all around the world. I taught in India, lived there for 2 years. I taught in Singapore. I lived in England for a little while, been all over the place, Dubai, and I've traded the local markets. So not just American markets, or I've traded global markets. And the same tactics work no matter where you go. Charts are charts, people are people. It's interesting, you're not really charting a security, you're charting people's perceptions of those securities and their actions they take based on their opinions. And people are the same everywhere you go. They have fear, they have greed, they have stupidity, they have smarts. So we can use this to interpret what those people are likely to do based on what they have done in the past. And that's all we can do when it comes to charting. So every period is a battle between bulls and bears. They're always fighting it out. The winner of the battle is at the close. We get to see, okay, who won the battle at the end of that period? Was it the bulls or bears? So now looking at, oops, did that wrong. I'm going to skip to my next slide there. There we go. Candlestick shape. A green candle closes at the top of the body of the candle. The red candle is the opposite. It closes at the bottom of the body of the candle. So any price action that you have between the low and the close, it is showing bullish pressure, right? Because the buyers pushed us higher because there's nobody willing to sell them at those low prices. So bottom tails or wicks or any price action below the close signals buying pressure. In the same vein, if you have any movement from the highs to the close, that would be selling pressure because the sellers had to lower their prices to attract buyers to transact with. So we either had no buyers or we had an extreme amount of sellers. So using that kind of overrides the color a little bit, because if you get a candle that looks like this, it's green, you might think buying pressure. No. By looking at where we close, which is the top of the body, we see that from the low, we only had a little bit of buying pressure. In comparison, the selling pressure was much greater than the buying pressure. So this can give you a little bit of a clue as to what's going on. And often before you make a turn, you'll start to see either bullish or bearish pressure creeping in. We go back to my live chart here. And in this particular candle, let me see if I can zoom in a little more. There we go. In this particular candle, the very last candle that I have here, we have a green candle. That shows buying pressure. But there's also a lot of selling pressure off the high. So that is not the strongest of candles. It does have a domination of bullish because the low to the close is greater than the high to the close. But overall, it's not the best. Even going back a little bit, notice where we flattened out. You had buying pressure, selling pressure kept us there, buying pressure, we finally moved up. Okay. As a matter of fact, we couldn't close below that point because all we had below that was buying pressure. Couldn't close there. 3 times we had buying pressure showing in. So that was a little bit of a clue that a bottom was being put in. Right now, because this is bullish, I don't think we're going to drop to a fresh low, but because we had bearish pressure here, we could see sideways movement. That's what that's suggesting. You go to the next candle, and I was wrong. Okay, so that's the way it goes. Sometimes it works, sometimes it doesn't. But we had that bullish pressure. Notice now we have less selling pressure than we had before. Okay, this is just, again, an odds enhancer. It's not perfect, but we've got less selling pressure than we had before. We have more buying pressure than we had before. There's a higher probability the next candle will go up and or be green. Well, it wasn't, but we didn't make a new low. As you can see, we did not make a new low. And again, it could be because of location and trends, things like that as well. Sorry. So right now we're seeing a little bit of buying pressure, a little more selling pressure. This is almost indecision. We've got no real direction here. Next candle gave us a drop. But notice on the drop, we're left with a lot of buying pressure. That's suggesting that we don't want to keep going down. Remember, we had buying pressure coming out of this low. We're seeing buying pressure increasing on these two red candles. Therefore, we're more likely to either move sideways and flatten out or move higher again. There we went. We moved higher. We've got plenty of bullish pressure, very little selling pressure on the top, not a big deal. And we pretty much went sideways. Now we have a domination of selling pressure. So we may see sideways to down. And there we went and closed lower. Well, since we have mostly selling pressure, there's almost no buying pressure there. The higher probability is to move to the downside. And there we made a fresh low. See that? So the question is candle size more important than upper tails indicate selling pressure? Well, size does have an indication, absolutely. I wouldn't say it's more important. They're about the same, to be honest with you. But yeah, size, it's just about how far away you close from the high and the low. So if you have a large candle, say we're closing near the top, that's obviously a lot of buying pressure, big green candle. But that would almost be the same if you had a very small body candle, but a very large bottom wick. So they can be interpreted very similar to each other. Okay. And indecision right now. So we basically wiped out all the selling pressure with buying pressure. So not really much going on there. Now we've got bullish pressure, but yet again, we're having problems closing higher. You can see we closed in the area of these opens and closes before. So there's some weakness coming in. We're overall going sideways here. And you can see sideways motion. This candle is indecisive. We have almost the exact same size of selling pressure from the high to the close as we do buying pressure low to the close. So we're at a pause point. Prices couldn't go higher, but they definitely don't want to go lower. We have to wait and see how this resolves. And now we resolve with lots of bullish pressure. We're likely to go more to the upside. We did make a new high. And then, of course, our selling pressure kicked back in and pushed us down. So again, it's not every candle that's going to work. You see there's buying pressure. We kept going down. Notice, though, here we were moving down. We got more buying pressure coming in, a little bit of indecision, couldn't really get selling pressure. More buying pressure, we're likely to bounce. And there's our move to the upside. Starting to see selling pressure coming in, we might pause. Does TF affect this argument? What is TF? I'm sorry. The video cam, you can move it. I can't move it. I can't change how it looks on your screen, I think. Oh, it's time frame? Sometimes. Again, you can do this on any security, any time frame. So if I go out to crude oil and we go out to a daily chart, what's going on there? Again, you can just look to see a lot of times before you bottom out or before you top out, you'll see wicks. There's bottom tails, indecision, bottom tail before we rallied. Back here, we had a rally, indecision, a little bit of buying pressure still. So we held up, indecision, selling pressure before the drop. Right now, we've got selling pressure that came in after we rallied. Notice even the topping tails on those green candles before we started moving down and sideways. That was telling us we were topping out because of the selling pressure there. We actually made a low. Buying pressure on the red candle. That's almost as good as a green candle, basically, because you have that buying pressure. Next thing you know, prices move up. So again, it's not always going to be the case, but it's a high probability. Now, you mentioned size. Looking at size, the height of the candle can show pressure or lack thereof. Okay. By the way, if you want more of this, and I'm only going to be here for about an hour, I want to make a mention real quick that if you go out to, and I think there's going to be a link available to you, but if you decide to join us, what happened there? When it does that, logged in, but it gave me this. If I go to my members section here on Wealth Builders HQ, I'd like to invite you to join me in the E-mini think tank. Because if you like what you see here, we do a lot more of this, and there's videos to help you as well in the E-mini think tank. So, Amy, I'm not sure if you had the link available for that for the E-mini think tank, or if I could probably bring it up as well. Here we go. But if you go there, let me see here, E-mini Think Tank. One of the neat things about the program is we have live meetings 3 days a week where we look at the markets in a real live environment and we identify opportunities in practice. Oh, there we go. You got the link there. Or you also could do a lot of self-paced education. So as I was saying before, I've got a lot of this recorded, and you can go in and see how I trade, again, trading routine and finding zones. There's not just a recording of this, but in addition to the recording that you can watch as many times as you like, if you remember, there are documents that go along with this. So you can go into the fundamentals here for the documents and see I have how to find zones, my pre-trading routine, rules that I use. They all back up the recordings for my teachings to help you get better at reading price. So if you're interested in joining the E-mini Think Tank, again, if you were to click on that link, what it'll do is it'll take you out to the enrollment page. And at the bottom, you'll see there are two options. You can join monthly if you want to, and that's $3.99 a month, or you can do quarterly. And the nice thing is, if you do the quarterly, we want to give you a little taste and see if you like it. There's a 2-week free trial if you join the quarterly subscription. So what happens is your credit card is not charged for the first 2 weeks. That way we don't have to worry about refunds, no mess like that. But when you enroll, your first 2 weeks, you try it out. If you like it, you stay, and it's auto renewed for your subscription. And every 3 months, it just auto renews. But if you don't like it before 2 weeks, you just send us a message and let us know, and we go ahead and cancel it for you. It's no big deal. So it's a great opportunity to get more involved in the markets and have a community of traders sharing ideas, as well as educating yourself better as to how the markets truly work. I'm very accessible when it comes to that workshop, those workshops. If you go to the very bottom of the member page here, you can see, you can just send me a message and I get back pretty quickly. So getting back to our education information, when it comes to the size of the candles, I like to joke and say size matters. And what happens with the candles, get to that one there, candlestick size. If we have a small range, now, by the way, when I'm talking about range, I'm not just referring to the body of the candles. Okay, when you're looking at candles, on page here, when you're looking at the body of the candles, that's the colored portion. The range is the entire height of the candle from high to low. That's what we're referring to when we talk about size, the entire range of the candle. And the size can give us some indications as to if we're likely to continue or we're likely to reverse. So small candles could be one of two things. Number one, remember, every candle is a battle between bulls and bears. So if we have a small candle, it could have been that there was nobody interested in buying and nobody interested in selling, so prices didn't move anywhere. There's nothing to push price in either direction. One of the ways you would see that is if you had very light volume. Now, sometimes very small candles, small range candles, have high volume. What that means is for every buyer, you had a seller, or for every seller, you had a buyer. There was a lot of activity, but there was enough on both sides, buyers and sellers, that prices couldn't move anywhere. Remember, candles show us filled orders. That's all they do. It shows us the reaction to people's actions in the market. So it tells us where people bought and where people sold. So if you get small candles, typically that is indecision, and you often will see a lot of small candles in range together before prices change direction. It's almost like if you toss something up in the air, it loses momentum. So when the inertia and gravity are equal on that object, it's really frozen in air for a split second, less than a second, and then it reverses direction. So you see right now we were moving to the upside. We have 1, 2, 3, 4, 5. I mean, you could consider more of these to be small range in comparison to other candles, but that is showing me, again, it matters the volume. If we had high volume or low volume, I don't know. Let's take a look. If I go look at the volume here. There we are. And you can see volume drifted down a little bit. So that means there was nobody interested in either buying or selling. So what happened? Sellers took over. You can see now, look at the volume pickup. Now the sellers are in control, but because there's so many sellers and no buyers, they have to aggressively drop their prices down. Okay. So, oops, let's see. That's strange. I'm not seeing some of the chats coming through. Anyway. All right. So again, small candles. Notice we had this big candle, then we had some small candles, and what happened? Prices reverse direction. So it's not always going to be that way, but typically when you see smaller range candles compared to the ones around it, especially if you see light volume, notice the volume was light there as well. Prices started moving back down. So you could get a change in trend when that happens. So small candles could indicate a lack of activity or large activity, but either way, it's indecisive and normally is a pause. Now, it could be a pause that continues trend, or it could be a pause that reverses trend. The difference would be with the location. That's going to be the most important out of all four anyway. So large green candles, that indicates a lot of buying pressure, but a lack of sellers. That's a huge imbalance. And if you get a large red candle, that's a lot of selling pressure, but there's no buyers, so prices had to move. Think about it. If you want to sell something and no one's around to buy it from you, the only way that you can attract a buyer is by lowering your price. And if there are zero buyers, you might have to be pretty aggressive and drop your price very far. So from the trade that occurred previously to where your trade occurs, if it's down here because you had to lower your price that much, you get a large red candle on the chart. Now, when it comes to these large candles, we also have to be very careful with location. Okay, sorry. Location is a big key to these large candles. Let me get rid of this volume for now, because that doesn't matter as much. But when you get a large candle, okay, a large candle, and I'm going to call them ERC, and that stands for expanded range candle. Okay, so basically, if the ERC is starting a new trend after a pause, or reversing the previous trend, those are usually the professionals or the institutions trading. Can't spell today. There we go. Okay, so if you get a large candle that is reversing the trend that you've been in, or it happens after a pause in price, that's usually the institutions taking over and pushing prices in a new direction. And when you think about it, it makes a lot of sense. For instance, it's not really the biggest candle here, but enlarge this right here. You can see that the candle on the right-hand side, that's a big candle in range compared to the candles before it, right? And the trend that we were in prior to that candle forming was up. And you can see we had sideways movement there, right? So we had a lot of things going on. Number one, we were moving up, and there you start seeing red, red, green, 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 red, 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 red. So we had domination of red. That's a warning sign that we're getting ready to move down. Number two, we had topping tails on the candles, also a warning sign of selling pressure. But then we get this expanded range candle to the downside. I say that's usually the professionals, because who wants to sell when prices are high? Many novices, amateurs in the markets, think if prices are going up, they're going to keep going up and I better jump on board. They had that FOMO, fear of missing out. So the professionals see this as being overbought and too expensive, so they start unloading their securities. The problem is, if they start selling, and again, nobody wants to buy, they have to lower their prices to attract the buyers, hence the large candle. Often these large candles happen on lighter volume than the candles before them. It's funny because people think, oh, it'll happen on high volume. Not necessarily. Remember, if there aren't a lot of buyers around, there'll be light volume as prices move very fast. I should probably have left the volume in there. Where are you? Yeah, this one was high. It's not always, but that one knows. Okay. And the same thing would be true if you get a large green candle coming off of the low. Let's see if we really have one here. Just kind of looking around to see. Well, actually right here on the hard right edge there, you can see we were moving down, moving down, moving down. And then right here, look at that range of that candle in comparison to the ones around it. It's much larger, isn't it? And again, I took it off. I don't like where this shows up here, but if I go to the volume again, may or may not have high volume. It's a little higher than the last candle, but it's not a spike in volume by any means. The reason why you have that large candle is because the pros are trying to buy something very cheap. And there's nobody willing to sell anymore. Most of the sellers have already gotten out. So in order to attract somebody to sell, they have to be aggressive with their prices and try to sell and buy. Sorry, they have to buy at higher prices and attract those sellers. So that's a large candle in the same direction. I'm sorry, in a new direction. And you can see, by the way, that was a big rally that occurred afterwards. So what happens, excuse me, I have an allergy problem today, sorry. So what happens if you get a large candle in the same direction you're already traveling? If you get an ERC in the same direction, those are usually novices chasing price. They have the FOMO, the fear of missing out. And generally, these novices tend to buy or sell after prices have already moved at exorbitant prices, and they're usually right before the end of the trend. So you see this one is pretty obvious. We were already moving down. You get a large candle in the same direction. You're already traveling. And that's because what's happening now is the professionals are not ready to buy yet. They want to buy at the very bottom or as close as they believe the bottom will be. However, everybody's panic selling. There's nobody around to buy. They have to drop their prices extremely low in order to attract any buyers to get out of their shares or their contracts. Okay. Usually, good question. If you get an institutional candle, do you have to wait for a demand to form or do you buy there? That's going to be a personal choice. If you get an institutional candle, usually those institutional professional candles are forming a demand zone so you can buy on the return back to that candle. If you try to chase it, you could be in a little bit of trouble. So generally what I'll do is if I see that forming, I'll wait for the retest of that area. For instance, we identified, where was it? I forgot where it was. No, I suppose, no, it was this one. Sorry. Right here, we never came back to it. There and there, we had pro candles and we just never came back. Here's another one. Notice we're moving sideways and we have a large candle in the same direction we're already moving. I don't know if we came back to that either. Let's take a look. No, not yet. But often they will be near or at the origin of a demand. Here's another one. Nope, that was novice actually, sorry. We're already moving up and you get that candle. So getting back to the novice candle, these actually offer some good trading opportunities because if the novices are chasing price, one of two things is going to usually happen there. If you get that large candle and you come into a demand zone or supply zone, those are where buyers sell, support and resistance. Some people use that. But if you have a novice candle occurring at one of those points, generally prices are going to reverse there. And that gives you the opportunity to see the end of the move. In this case, it wasn't really a great zone. You can see that was the origin of this rally. And then we did bounce there. So right there was a reversal. Let's see if we get another one here. Not really. Here we have another one forming. This is a novice candle. Notice the large candle after a move in price. And one of two things is likely to happen. If there's supply here, if there's a lot of selling pressure, resistance up above, this is going to be the end of the trend. And we should drop. It may not be on that candle. It might be after it, but it should be pretty close by. Or if there's not a supply zone or resistance, what's going to happen, because the novices are jumping in late, the institutions will often come back to the beginning of that candle to shake out the novices. Think about it. If you bought here, and especially because it's a breakout of a prior high, look at this. They're buying that breakout of the prior highs, right? Often what will happen is their stops will be sitting just below that area. The institutions know that. They will push prices back below that area to shake out the novices before it goes higher. And it's a dirty trick, but it happens often enough that I have a whole strategy around it. I was mentioning the E-mini think tank. If you go to the member section, and let's see, it's not news strategy. Right here under my bonus videos. Where is it? And I thought I had a video on this. It's in one of them. I'm not sure exactly where it is, but I do know I have documentation on it. Other strategy, perhaps. There's a whole documentation on the novice candles, now to trade those. So I have documentation on it, as I mentioned. I'm just not sure where it is right at this moment. But in there, I have this whole strategy written up, and we actually do this on a regular basis in the E-mini think tank. So if you're interested in learning more about that, like I said, you can join the E-mini think tank, and you can try it out for 2 weeks for free if you do the quarterly subscription, or just try a month if you want as well. Anyway, what happens with this, we should come back to the origin of that candle to shake out the novices. In this case, all we did was go back to the breakout point, it looks like. You can see it came back to the breakout point and then moved without the novices on board. So sometimes it breaks out, sometimes it pulls back all the way to the beginning of the candle, sometimes it only goes to the breakout point. Either way, identifying those novice candles can give you an advantage because you can buy at a better spot or even sell at a better spot, or not get caught when the markets reverse. That way you maximize your profits. Here's another pro candle, large candle after a basing right there. See if we get a novice candle coming up anywhere. No, not really. There's one. Notice we're already moving down off the highs. We get this large red candle, which also is breaking prior lows. You see right there. So we're likely to see a reversal here, or a pullback, at least to the beginning of that candle before we go any lower. And it didn't quite pull back all the way. It did go back above the breakout point and then moved lower. What happens is the trap is set because people sell here. They might have their stop right above, and then they see prices going lower without them on board after they got shaken out. They're likely to jump back in. That helps the institutions. So right here's another novice candle. We have a large green candle after a move in price, breaking out of these highs. You can see we stalled out immediately. See if we pulled back. There it is, pulls back before going higher without everybody on board. This happens so often. This happens to be on crude oil. I mean, we can go out to pound yen. Like I said, it happens on any security, currencies included. So here was one. Let me clean up my chart first. Just kind of popped out at me first there. Doesn't look like a big candle, but when you look at this in relationship to the ones around it, notice the range is quite large. And we're likely to come back to the beginning of that candle to shake out the novices, run their stops. There it is. Now that they're all out, prices go higher without them on board, and they jump back in to try to catch up. Happens a lot. This may be another one right here. Let's see if I resize this, it shows a little better. You can see that larger range candle compared to the ones around it. There's your pullback. And we didn't really go any higher. Oh, another novice candle moving to the downside. We didn't have a breakout, so this may not be the best trade opportunity. But if you happen to be on the short side of this, I'm on a daily chart, that's warning you that we should get a rally in price because we dropped after we had to move down with a very large candle. And look at that. It was a pretty good warning, wasn't it? So these happen quite often. You get those large candles after a move in price in the same direction you're already traveling. Oops, I hit the wrong button there. Hang on a second. So once again, we've got, so far we covered color, shape, size, and now location. So location is the most important factor out of these four. Color, shape, size, they're great, but location is key. Just like real estate, location, 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 right? So again, looking at the color, we're looking for domination or weakness when we have mixed colors. Shape, we're focusing on where we close in relationship to the highs and lows to see what kind of pressure we have in our candles. Size, small candles indicate indecision, could be a change in trend or at least a pause in the trend. While if we have large candles, that is usually either the pros starting a new trend, or if it's in the same direction we've already been traveling, it's the novices chasing price, and they usually catch it right before we reverse trend, or you get a pullback to shake out the novices before you continue in that same direction. And if you want to learn more of all these, again, you can click on that link that's in the chat. That'll give you some information. Gives you the opportunity to join me in the E-mini Think Tank, where we go over this in a lot more detail and a lot slower, obviously. So I mentioned location. Location is key. A supply zone, basically, I don't trade support and resistance. Support and resistance are very common topics. A lot of technicians look at that, and I found that they're not as good. And the reason why is, I want to see who is making the majority of the money in the markets. The most successful participants when it comes to the markets are the big institutions. That's really who it is. And if we see somebody who's being very successful at something, the best way for us to become successful is to simply copy them, mimic them. So what we can do is, if we can identify where the institutions are buying, we should then buy with them. If we can identify where the institutions are selling, we should go ahead and sell with them. Because if they're doing well by doing that, then we should be doing well by copying them. It's not always going to happen. It's not perfect, but it's the best we've got. So instead of looking at support and resistance, what I'm doing when I look at a chart is I'm looking for patterns on that chart. And the patterns on the chart let me know where the institutions bought and sold. Part of my background was that I traded for a hedge fund for a while. And I also traded for a brokerage. So I filled orders from institutions and I filled orders from retail customers. When you get a large order, you cannot put in your order all at once. Say I'm going to trade, maybe not in the currencies here. If I go to we'll go to Tesla. And looking at Tesla, let's see, do I have market depth on this? Not sure if I do, actually. Yeah, I'm not going to bother with it. Let's see if I have it. There we go. And this may not give me most information because I don't have the subscribed on this, but you can see everyone looking at this right now. You've got buy quantity of 200 shares, sell quantity of 100 shares. What if I was an institution that wanted to buy 25,000 shares? If I try to buy 25,000 shares, there's only 100 being sold right now. There may be others at other price levels, but for the most part, I'm not getting 25,000 shares all at once. If I try to go in with 25,000 shares, it's going to show a huge amount of demand, and prices will probably jump in front of me as other people see I'm trying to buy a huge amount and want to buy in front of me, because they're like, whoa, oh my gosh, somebody's trying to buy a huge amount, right? So you cannot do that. What you have to do, and this is what institutions do, they identify the area where they're willing to buy. And then what they do is they program their computer. Okay, honestly, most of the trading that's done is by computer. It's not done manually anymore. They program their computer to buy only in that range by working the order. And what they do is they put in small orders and just keep refreshing. If the market starts to move out of that range, they stop buying. Okay, they've identified the range where they're willing to buy or sell, and they're not going to go beyond that range. What they will do is when prices come back to the range, then they'll start buying again. So what happens when it comes to our charts is when these institutions are buying or selling, They leave footprints behind. Okay, let me clean this up a little bit. Actually, there's a great example of it here. Okay. Didn't work quite the way I wanted to. There we go. What happened was back here, prices were moving sideways, right? You can see sideways motion right there. And then we had a gap up, and not just a gap up, but we ran up and we continued to go higher. We stalled out a little after that. So who has enough power and enough money to cause that kind of a move? Not individuals like us, the institutions do. So that was likely to be an institutional buy order. And the problem, the reason why it jumped up so much was because there was no sellers in that area for them to transact with. And based on what I just told you, what do you think the probability was they got all their orders filled? Probably pretty low, right? Because what they have to do is they have to go in with small amounts. And if they were trying to buy, and by the way, they can buy pre-market as well. That's why you're seeing gaps. There's a lot of pre-market activity perhaps on this. But because there's so much demand for this stock and not enough sellers, prices not only gapped up, but they ran up after that and gapped up again and ran up after that. That left behind unfilled orders. So what happens to those unfilled orders? They get filled when prices return to that area. It might take a couple of hours, a couple of minutes, a couple of days, a couple of weeks, a couple of months. Who cares? But when we see an area like this, that's the footprint of the institutions. Prices are likely to come back to that area, and then we can buy with the institutions. So if I put in a buy order 624.48, watch what happens. Prices eventually return to the area right there. And we buy with those institutions. So I might have missed out on their initial move, but who cares? I can buy when prices come back. And if it doesn't come back, what if it doesn't? Who cares? So you find something else to trade, right? And by the way, if I bought with the institutions, didn't I just make the same amount of money they did before? It works. That is a demand zone. It's an area of demand where there's a lot of buying pressure, no sellers. Same thing works for the supply zone, where there may be a lot of selling pressure and no buyers. So if I see certain patterns at supply, that's where prices are likely to drop, and that's where I would need to sell. If I see the color, shape, size locate at the location of supply, that increases my opportunities and my odds. If we're in the middle of a trend and we see these patterns, color, shape, and size, it might just be a pause. And of course, if we see this at demand, that's our buying opportunity to be able to trade alongside of the institutions. Don't try to fight them. They have a lot deeper pockets than you do and a lot more knowledge of the markets than you do. They'll get wiped out. What you need to do is befriend them, or at least trade alongside with them. It's kind of like the pilot fish. If you're not familiar, pilot fish, small, they're striped. They look like zebras almost. They have white and black stripes, and they swim around with sharks. The reason why is they basically capture and eat the leftovers from the shark. The shark goes in and captures his prey. They get the leftovers. They'll even sometimes swim to the shark's mouth and clean out his teeth. It's like the live toothpick. The shark doesn't bother them because it still gets to eat, and it actually helps them sometimes. So in the pilot fish, they get to get these huge crumbs that are left over from the shark killing its prey, and they don't have to do all the work. Yeah, remoras as well, same thing. Exactly, J. Keith. So that's what we want to do, is find where those big institutions buying and selling, and the location is all about that. So again, if you're interested in learning more about this, unfortunately, I've run out of time, but I have plenty of time and plenty of information. If you go back to the E-mini Think Tank, if you want to join me there, right here, you can see there's a lot of stuff on trends, certain strategies that I've done in the past, as well as finding zones. Right there's a whole recording on how to find zones, even how to find the right targets. Additionally, you also have the documentation that backs that up, where you can go in and see exactly how to find the zones the way that we're looking for the institutional trading. So if it's something that interests you and you want to learn more, join me in that E-mini Think Tank by clicking on that link. And if you want to try it out for 2 weeks, use the quarterly subscription. You get a 2-week free trial there. If you just want to try it for a month, do the monthly. That's fine too. So Joseph was asking, you want to look for reversal candles in the proper location? That is probably the best thing you could possibly do. Exactly. You go back to color, shape, size, location. As I mentioned, location is key. So if you get the right size or shape in the supply or demand zones, that's where your best opportunities are going to be. So I want to thank you all for being here. I appreciate your time and spending that with me. Thank you, Oscar. I hope that was a good explanation as to why those work for the zones. Like I said, I've got lots more behind that. I've been doing this for a long, long time, and I love what I do when it comes to teaching and trading. It keeps me active. It keeps me interactive with other people and getting to learn more from other people as well. So thank you for your time, and I hope to see you in the next E-mini Think Tank. Till then, trade safe and trade well, everyone. So take care. If you got any questions, by the way, I'll stick around for a minute or two and answer those. So yeah, I use the Fibonacci tool to create the zones rather than I do that on all my platforms. I was working with right here is another platform I've got called, oh, there we go, Omega Charts. And the download is running a little slow because I've got too many things going on here, but let me log into my live streaming. And I did the same thing here where it's probably gonna give me a bunch of alerts. But yeah, what I've done is I've created, instead of the Fibonacci, the way I normally use them, I created a zone tool to draw my zones with 2 lines using Fibonacci. And that's not the one chart I really want to look at, but it doesn't matter. That's frozen. So if I go back here, yeah, you can see I've used the Fibonacci tool to be able to draw 2 lines at once. The only thing you have to do is just simply edit and just do 0 and 1. That's how I do that. That's the same on pretty much every platform. Let's see. Oh, that's why. Come on now. Yeah, it's frozen again. It's running a little slow. Anyway, again, thanks for being here, and everyone take care. Have a great afternoon, great weekend. Oh, thank you, Steve. Steve said, great presentation, the most complete I've seen, integrating supply and demand as a foundation. Thank you. Okay, great. All right, bye for now.